Thank you, Craig. Hello, ladies and gentlemen. My name is Ritesh Andley, and it is my absolute pleasure to welcome you all for this panel discussion on beyond digital banking and embedded finance. I would also like to welcome my panelists, Cato Pastoll and Kris Hansen, who are both accomplished entrepreneurs. And I would rather have them introduce themselves. So, gentlemen, a request to you when you are about to answer your first question, please start with your introduction there. I've got a few questions for you here, but I would like to leave about 5 minutes towards the end of the session for Q&As from the audience. So let's get straight into it, guys. So I would like to start with, how digital banking started, right? It was basically a user interface which the traditional banks, they offered to their end consumers to interact with them. The whole experience was curated by the banks, and if they were working with a fintech, they also used to come and integrate into this interface. But with embedded finance, things started to kind of flip. The user experience was now curated elsewhere by a third party, and the financial transactions started to become incidental to the whole flow, right? So I would want to get deeper into how this works and what kind of benefits can the consumer, end consumer have from it. So Kris, if I could start with you. You're the co-founder of Synctera, a banking as a service company. Can you please tell us, how banking as a service, embedded finance, open banking, some of these buzzwords that we keep hearing are related to each other, and how would the open banking regulations which are expected in Canada, going to impact businesses like Synctera?
Thank you, Ritesh. Thanks for having me. Just to maybe give you a sense of what we're doing at Synctera and why we created the company. We're really focused on helping people that have a digital experience that they've created. Maybe they're in a different industry, but they want to be able to offer financial services capabilities, and they want to do that in a way that's safe and secure and digital first. They need a lot of things to be able to do that. They need all the financial services capabilities. They need a bank partner. They need, they need regulatory oversight. They need to be thinking about all of the risks and ledgering that's involved in doing banking properly. And so what we do is we bring that to the integrator as a platform. And the integrator might be a fintech, it might be a retail brand, and really what they're trying to do is enhance their experience, reduce friction, make money movement faster, create the context of financial fund movement in a way that's safe and enhances the experience for their customers. And I really came into this space, having worked both in banking and in the fintech space. So I used to be the head of solution architecture at a Big Five Canadian bank, and I was also previously the CTO at Coho Financial, one of Canada's challenger banks. And then for the last 3 years, building Synctera, we've been building in the U.S. We've got 10 banks in the U.S. We've got 40 programs live with us. And just last week, we announced that we're coming into my home country, Canada, which is great. And I think to your point, there is an intersection between open banking and banking as a service. And I would say open banking is largely focused on, getting consumers their banking information and their data and creating more of a level, secure playing field for consumer information and consumer financial information. Where banking as a service picks that up is, once consumers see that information and they can see that they've got this banking information, they're going to want to do things with it. And that's where we come in. We're sort of the action layer around this consumer banking information. If you see your data and you see that you've got maybe funds in the wrong place and you want to rebalance your deposits, we would give someone the tools that would allow the consumer ultimately to be able to do that. So I do think that there's an intersection point there. I think it's exciting that Canada's been talking about open banking. I'm even more excited to be doing open banking in Canada. And so I'm really looking forward to that.
It looks like you've chosen just the right time to come to Canada. So welcome home. The other thing that caught my attention, you spoke about, making businesses who are not traditionally offering financial services to enable them to offer financial services. So what kind of, businesses can we see offering these services? What kind of services can we see, businesses offering to the end customer? And why should the end customer care? I mean, what is it what's the benefit that I, as an end customer, would gain from all of this?
Yeah, I think that's a really good question, Ritesh. I have to say, over the last 3 years, the number of use cases that people have come up with and built on our platform at Synctera in the US has really surprised me. So it's everything from automotive manufacturers that want to rethink their dealer financing structures to insurance providers that are rethinking how they pay out claims and manage payment of claims. Different and new types of charge cards is a whole theme as well. Retailers that used to do these very simple branded credit card partnership programs, they're looking at that and saying, well, that was fine, maybe in 1990, but now we want to do something different, something new. We want more awareness of what the customer is doing next. We want to be closer to them, and so they're rethinking these programs and looking for more branded card plus deposit account type experience, plus rewards, plus in-store sort of benefits. We're seeing a lot of commercial type programs as well. So, creating a forum for, a few hundred investors to get together and buy an apartment building and then, manage the payment associated with the acquisition of the property, but then also the disbursements from rent, and, things like the management of the upkeep, all managed on our accounts, reconciled and kind of paid out to shareholders. So I have to say I've been really surprised at what people are coming up with. A lot of these programs are really successful, and it's really beyond what I would think of as the original challenger bank concept, where you think of like a B2C consumer facing challenger bank. Certainly we see some of those, but it's I'm seeing a lot more B2B, a lot more commercial use cases as well.
That's great, Kris, because what I understand from you is that you have basically created an environment where everybody now can use that environment to innovate. So it's not one bank or one person sitting in the bank's responsibility to kind of innovate. Now we have actually created an environment where everybody can innovate and launch new services. That's phenomenal. And I can see the kind of new services and the impact it will have on the end consumers. Shifting slightly to small and medium businesses, Cato, hi. We heard Kris speak about how BaaS is going to impact the end consumer. You're the co-founder of Loop, a company which is focused on small and medium businesses. Can you speak about how have the traditional services or the current services of a traditional bank been underserving the segment that you are after, and how would players like Loop, how do you stand to change it?
Yeah, absolutely. No, thank you, and thanks for having me on here today as well. I'm happy to be talking with you guys. It's a great conversation. So, to kind of dive into that a little bit more detail and kind of, I'll start by explaining what we do at Loop. What we've built is essentially the first kind of global banking platform for small and medium-sized businesses in Canada, so that they can effectively manage their finances all around the world. So to talk a little bit more specifically to what the pain point is or what the challenges that many small businesses have is, banking as it exists today, and I'm sure Kris can talk to this as well through his experience with Synctera and others, inherently is local, right? Banks exist on a local geographic level. There's Canadian banks, there's American banks, there's British banks, etc. But there's no concept of really global or international banking yet. With the evolution of business and online activity, with the likes of Shopify and Stripe, who have made it really easy for companies to do business online, there's tons of companies all around the world now who are managing their finances across multiple different markets, right? If you're selling goods online, you're typically selling to customers not just in Canada. Even if your business is based in Canada, you might have customers in North America, South America, Europe, Asia. You might have vendors all around the world. And so with that kind of evolution of business, there's been an increasing need for kind of what I call global financial services, the need to kind of transact globally. But yeah, there is infrastructure and there is the ability to provide those types of services. But if you're a small or medium-sized company that's doing business with one of the banks today, it's actually very hard for you to transact internationally. It's hard just to do things like open up a US account as a Canadian company, or open up a European account. It's hard to get paid from your customers. It's hard to make payments to your vendors. I still talk to people every day who have to walk into a bank branch, every morning to literally go and send a wire to one of their vendors so that they can buy their inventory for their business. So, there's a myriad of pain points that small and medium-sized businesses have, all centered around, the core parts of running a business, which is getting paid or making payments. And what we're trying to do at Loop is really make it easier for them to manage their money around the world so that they can do those things more seamlessly, more cost effectively, and ultimately kind of help them grow their business faster. So that's kind of what we're doing to try to alleviate some of the pain points that small businesses have with the kind of traditional banking sector at the moment.
And do you think that there are challenges that fintechs like yourself or service providers like yourself cannot solve, and you need intervention from maybe regulators or governments, or even is there a role for nonprofits like NCFA to kind of play in facilitating the kind of things that you want to do for SMBs?
For sure. I mean, I think you mentioned open banking already. There's also a lot of other regulatory advancements around payments, around managing customers, and kind of KYC, customer onboarding, et cetera. So there's several regulators who touch kind of the day-to-day aspects of what organizations like both Loop and Synctera and many others. And a lot of those regulations haven't really been brought up to date yet. So to this point, for example, if you want to get customer data in order to provide a credit product to a small, medium-sized business, just to use that as an example, the current way of doing that is not particularly user-friendly. It's not particularly robust or stable in terms of the mechanism of accessing that information. And so, there's definitely a role to play, particularly from regulators, government, as well as organizations, in terms of helping to make the kind of playing field more level, and ultimately benefiting the customer so that they can leverage their data and their own information to be able to transact in the way that they want to transact, right? So it should be easy for a customer who wants to use Loop as a service provider or any other fintech to simply share their information with them, or even to more easily move money or transact on payments with that provider. But today there's many points of friction in those kind of customer relationships. And so, that's something that I think many people in the fintech space are advocating for a change on, to kind of make it easier for customers to do their day-to-day business and transactions.
Right. And Cato, you touched upon access to information, access to data, sharing of all of this. So Kris, if we spoke about what benefits the customer is going to get with all of this data becoming open, all of this information becoming open. Can you talk about some of the risks that also come in, and how does the IT and the security landscape of financial industry going to change with banking as a service and embedded finance coming into the picture?
Yeah, it's a really good question, Ritesh. Like, I think in the early days of open banking, a lot of people misunderstood that what open banking means is that all the information is open to the world. That's not the case. Really what it's referring to is that consumers can have access to their data in a secure way, in a context of another application or provider that's allowed to access that data on your behalf in a way that's secure. This is, being done already in the industry, I would say, less securely than it could be. So, we'll see an improvement there with open banking, as we get to kind of better technologies and protocols with that. But on the topic of banking as a service, it does, it does change things a bit in terms of the security landscape for banks. When you think about a platform like ours, we have many vendors that we're integrated with. We're the source of truth for the customer. We're the source of truth for the accounts and the transactions. We take that information very seriously. We take the stewardship of that data very seriously. The consumer controls, with their integrator, what they've allowed the integrator to do with that information. But to the bank, it means that, suddenly there's a lot more third-party risk to manage, and we facilitate that third-party risk management. We have a very strong third-party risk management program. And we also think about, and the bank needs to think about, the fourth parties. So if you're partnering with someone and you vetted them, that's fantastic. But what about their partners? And, as we know in financial services, it's a network. And we rely on each other, and that means also that the weakest link is the weakest link of the entire network. And so we work very strongly with our partners to make sure that we're thinking about the third and fourth party risks and managing that, and full visibility on that for our banks is really essential for us.
Perfect. That's great to know. And taking a cue from your answer, for my next question, Cato, I just wanted to understand, for your business, Kris talked about partners. So for your business, how important is the partnership with other fintechs, and how do you see fintechs adapting well to what you need from them?
Yeah, I mean, our business is kind of inherently dependent on partnerships with many different stakeholders and service providers. So now, as I was kind of saying at the beginning, banking is inherently local, and as a result of that, if you want to transact in other markets, you often need access to service providers, whether they be banks directly or fintechs who interact with banks in those markets, to be able to tap into local accounts or local payment rails. So for example, if we want to be able to transact in the UK for our customers, so our customers can get paid in the UK or make payments in the UK, we need to have partners that can support that level of activity. It's obviously a lot for, and this is, I think, why Synctera exists. It's a lot for an organization like ours to try to build everything ourselves, right? We can't go and set up different banks and different regulatory structures in every country and around the world. So we depend on partners, whether they be service providers, fintechs, or banks, to help us do transactions globally. And so the openness from those partners to want to build relationships and transact is a critical component to making better customer relationships. And I think, frankly, this wasn't possible 10, 15 years ago because we actually didn't even have partners out there that wanted to move things forward and allow people like us to build better customer experiences. But I think in the current decade, we're seeing a huge amount of advancements from banks, fintech, service providers across the board to allow new ideas to really come to fruition in the financial services space. So my answer in short is we wholly depend on partners to be able to operate our business.
Wonderful. And Kris, in your opinion, we spoke about the consumers, the government regulations, and partners. This whole change, this shift in the paradigm, is it more of an opportunity or more of a challenge for the present day financial services institutions?
I think it depends on where they land with innovation in general. So if they're partnership friendly, if they're thinking about how to partner with innovators, then I think there's a lot of potential there. They can work with that. I think if there's resistance and they really don't want to see any partnership, they don't want to see any innovation, they just want to do things as they've been doing it. I think we've seen with other industries that generally doesn't play out very well in the long term. Like, we know that change is coming. We know that consumers are expecting more from their other institutions and partners and companies. And I think it's up to all of us in the industry to really solve for, how to make financial services more adaptable to people's lives, how to make financial services more flexible, how to make financial services more relatable. And I know a lot of the larger institutions struggle with legacy, and they struggle with both legacy technology and legacy process. And in many ways, it's just a reality. If you've got a 100, 200,000 person firm, it takes a really long time to move that ship. But if I can partner with someone like, let's say, I'm a bank and I partner with Loop, I can, significantly improve my velocity of innovation by working with an organization like Loop that's doing things quickly, doing things innovatively. And, Synctera is just the glue that brings these partnerships together and makes it happen in a way that's financially sound and regulatory ready.
Great. Kris, Cato, I can just go on and on with all of these questions. It's just phenomenal to talk to you, but I guess I'll just have to be mindful of the time. So I want to open this session to audiences for their questions. Our audiences can use the chat option to send their question. And I think I can see the first one coming up in the chat. The open banking regulations in Canada, they've been delayed, right? So how does it impact businesses like yours, Kris?
So Synctera operates today in the regulatory environment we have today in the US and Canada. And we do that by partnering a chartered bank with a non-banking entity. And we facilitate that partnership with our platform. We're excited about new regulations. I think it opens up the playing field for other parties to participate. I think there's a way that we can play today. I think there's a way that we can operate tomorrow. It's a little bit different, but I'm excited about new regulation in general. Being a former challenger bank, builder. I would have loved to see some regulations that allow me to operate, with my own paperwork. But I think there's a reality that even with the announcement of new regulations take time. And, I think our platform at Synctera is really expecting the environment we have today and anticipating the environment we're going to see tomorrow.
Right. The other question, and Cato, I'd really appreciate if you could take it, is how does the legacy infrastructure of banks, and Kris did touch upon it a little bit, but can you get into the details of how does the legacy infrastructure of a bank poses any kind of challenge, for players like you? You are doing a lot of innovation, but how does that get impacted by what exists in the traditional financial institutions today?
Yeah, I mean, I think the traditional infrastructure is one of the reasons that some of these things move slowly, from an advancement from a regulatory perspective, because for the large financial institutions out there, it's not easy for them to move their systems forward and move their technology forward to be able to adapt and create things like APIs for other people to plug into to access customer data or initiate transactions. So there's definitely a lot of kind of inherent challenges with that legacy for those large incumbents, but it's important on the other end for the end user to be able to benefit from the things that advanced regulation will bring, like for use cases like open banking, like we were speaking about. So I think for somebody like us, we have to kind of operate within the constraints of what is doable today. And so many times, what I describe what we do as is essentially, sellotape and sticky glue over a very old and legacy system to build amazing customer experiences for end users so that they don't have to deal with or see any of that stuff that's happening in the back end. And they can benefit from this amazing banking experience that they wouldn't be able to get anywhere else. But in reality, in the back end, we're, managing money across lots of different systems. There's kind of daily batch jobs and clearing files and things like that that are, going across different providers in the back end and in different countries and different markets. But to the end user, it looks magical. So I think what we have to do in our job as a service provider is kind of create that great experience for the user, and on the back end, figure out how we can make it all kind of fit together on top of the legacy infrastructure that exists.
Perfect. Perfect. Thank you. Gentlemen, like I said, I mean, we can go on and on with this session, but I think this time that we need to conclude. So as we draw closer to the end of our session, just wanted to say what a pleasure it has been for me to chat with both of you. I'd like to thank you for your time and also thank our organizers for organizing this session. And last but not the least, definitely our audiences for the session today. Have a wonderful day ahead.